What's up, everybody? It's November 1st, 7:32 a.m. California time, and like the title said, this is for all the new subscribers that don't really know what they're seeing on my charts and don't understand what I'm doing. So, this is actually a repeat video. Those of you who saw the first one, no need to watch this one, I would assume. But I'm going to go ahead and start explaining now. I use a modified Wyckoff method. You can look up the Wyckoff method on Google. There's plenty of information about it. Investopedia gives you some decent information about it. Anyway, using this system, you have to understand three things. That the market is always in one of three phases. The three phases are shown on the chart that you see before you right now. The first phase is a consolidation, which is marked by the yellow boxes and the yellow line, which is barely visible right here, coming out of the middle of the yellow box. That's called a consolidation line. The box is called a consolidation box. Okay. The three phases are consolidation, which is marked by the yellow box, expansion, which looks like this whipsawing motion right here. This is always expansion. When you see the market doing this, that's expansion. And last but not least, the most important is trend. And that's this right here. That's a super bullish trend that got us up into the price ranges where we are now. Okay, so the tools I use are simple, easy. I keep it as simple as possible. So I use the Fibonacci, which is right here. I use volume, which is down here. I use the MACD, but not like other people use it. As a matter of fact, you can see my settings are 6, 10, 6, not the normal MACD settings. The reason that I do that is because it becomes less of a lagging indicator and closer to a right on indicator. And the way I use it is to confirm my consolidations. On the MACD, consolidations usually look like an intertwining snake, like right here. And you'll notice this is where my box is, right over the intertwining snake. There's another little one right in here. That's where that box is. Okay, that's what this is used for in my style of trading. So the consolidation line, as you can see, the price keeps interacting with the consolidation line. It's like a magnet. Magnets do two things. They attract and they repel. They attract and repel. Okay? So that's what you're going to see around the consolidation lines. The price is going to jump to it and jump away from it. It's going to act as both support and resistance. Right here, you can see it's acting as perfect support. And it created a channel between the resistance up here and the support layer down here. Okay, this is actually the real support because it's on a Fibonacci line, and there's two, like it says right here, ghost consolidation lines running from these two consolidation boxes. Okay, if you notice while I'm holding the mouse right here, you can see 6, 8 blue boxes on the consolidation box. The boxes in the middle, they're laying right on top of the Fibonacci line. This makes it strong support. Like I just said, consolidation line can be support or resistance. While the price is above it, this is super strong support area. This is why it failed to break through. The same can be said up here. This is super strong support. This is why we wicked, got past 35K again, but there's really super strong resistance up here. Push this all the way back, turned this red, started this back down towards the consolidation lines and the Fibonacci. So basically what it did is it created this channel marked by the blue box right here. This is more or less where the price is trading right now. Let me move this back down onto the consolidation line right there. That's the actual full channel. So that's where the price is going to be trading. Not really sure how much longer. Yesterday's video, you'll see that I thought this action right here was going to happen over here. Obviously, I was wrong about that, but not wrong about the actual movement itself, just about the timing. And that's what absolutely nobody in the market gets the timing perfect. No one. Anyone that says they do, they're lying to you. So that's where we are. You can see the current candle. It's turning back and forth between a green doji and a red doji. Market's trying to make up its mind where it's going right here. I looked before I started this video, and basically the day was red. Yeah, it still is. Okay. So on the day we're red. So if you go back down to the hour, you can expect this to probably stay red for the next couple of hours since the day is red. Let me check on the week real quick. The week is actually green. So the day may not stay red. So right now we got a spinning top green doji formed. And if you don't know what spinning tops mean, you can go ahead and Google that real quick. But it's basically a candle of indecision. The market's trying to make up its mind whether it's going to go back towards the 35K trigger point and test that, or come back down here and test support. I believe it's going to try and come back down and test support. Okay, just because of the higher time frames. That's the other thing that you need to know. Higher time frames normally dominate the lower time frames. So if the day is saying it's red, all of the hour time frames are most likely going to be red as well. Okay. So that's mostly what's going on here. As far as entry and exit points, this is where the consolidation line comes in again. If the overall market is in a bullish direction and we're trading from here, we just came out of the consolidation and it breaks under the line, and we know that the market is in a bullish direction, this break right here would be an entry point. And then as we get up here, we would enter here with a trailing stop, and at the time, I'm not sure if this was already, actually it was. Okay, we could see that there was resistance back here. It's about at the same level. So yeah, would have known to get out right around in this area because of past price movement right here. It's already shown that there's a resistance level up here. we enter here, we know that there's a resistance level somewhere around here. Okay, that's where we would have set our exit point. So enter here, exit somewhere around here. Everybody trades a little different, but that's basically what happens in this style of trading. When you're in a bullish direction, anytime the price dips below the consolidation line, again, entry point, if you know the market is still in a bullish direction here. Anytime it actually touches the consolidation line, as long as the market is still in an overall bullish direction, that's an entry point as well, because it means it's going to bounce off of the consolidation line or wherever the support is near that consolidation. So, new subscribers, that's pretty much what's going on. Oh, one last thing that you're going to see here is the trigger point. Okay. The trigger point in Bitcoin comes every $5,000. So it was a real easy pattern to spot. And if you go back over here at this trigger point, it hit it and then it took off, had a little retracement and then shot off. Okay. Back here, obviously, this Fibonacci line would not have been there because the fib has moved like I believe 3 times, maybe 4 times since back then. And this is where we are right now. So should we get above like a full candle above the trigger point, it'll usually take off on a 3-4 hour run in whatever direction. Also, it can hit this trigger point and bounce off of it and go in the other direction and run 3 or 4 hours long. That's how they normally work. There's one other tool that I use, and it is the Heikin-Ashi candles. Okay, I use the Heikin-Ashi. If you notice, all of the candles just changed, and now you have these long blocks of green and long blocks of red candles. Okay, the Heikin-Ashi basically shows you the trend. Okay, when I was talking about an entry point right over here, what I'm always trying to do with every single entry point is I'm trying to catch a trend. Okay, I don't want to trade in expansion, and I definitely don't want to trade in consolidation. If you're trading in consolidation and you're making money, you're a fucking badass. Excuse my language, but yeah, you're a badass if you're doing that. So this is the last tool, I believe. Went over the MACD, volume, regular candles, Heikin-Ashi, Fibonacci. This is pretty much the last tool. And yeah, it's all I use it for is to make sure that I can see the trend when it's happening. Okay, like if you want, you could say that, yeah, this is a little mini trend right here. All right, but this isn't the trend I'm trying to catch. I'm trying to catch this kind of trend like everybody else. I want to enter here like under the consolidation line and hit this kind of trend. Don't fear the retracement. Have your trailing stop back far enough so you don't get stopped out by a retracement, because a retracement is going to happen on every trend in the book. There's going to be a little retracement before the trend finishes. So you have to be prepared for that. And when it happens, don't fear it. Don't think that it's getting reversed on you. Know that retracements happen in big trends all the time, just like you saw right there on the chart. Let me move back over here where we are. Okay. So, like I was saying, I'm expecting it to come back down here, retest the support level, because on the day it's red, and we're looking at the hour chart right now. So the day chart is going to dominate the hour chart. So if I'm trading this chart, I know I have at least a few more hours of red candles coming. Why? Because it's only 7:52 a.m. That's why I got a whole lot of daytime in front of me, and the day candle is red. So I can go ahead and assume logically that the next couple of candles, because we're only talking a couple of hours, are going to be red. So what I would do before I enter a trade is I'd come back, check the day chart, change my candles, and you can see that candle is a strong red on the day chart. Why did I switch candles just then? Because I'm not checking for the trend right now. I'm checking for the overall market direction, what's dominating right now. What's dominating right now on regular candles is a red candle. So my day is red. This is why my hours are red, because my day is red. Again, the Heikinashi is just to confirm the direction of a trend. Like if there's too much noise right here, too much red and green, and I can't tell which way the trend really is, although that's almost impossible, but the Heikinashi just wipes out all the uh, alternate candle noise and gives you the overall direction of the trend, which is, we can see right now is coming back down to test the support. Like I was saying, I figured it would. Didn't know it was going to get that kind of volume behind it so soon. Don't believe it's going to be strong enough to crash through the triple threat support area right here. The two ghost consolidations and the Fibonacci, I believe, are going to hold um, unless we get some more volume like right in here. This area should hold. So this is only a test. Should get, if it touches this, it should get pushed back pretty decently like it did over here. However, that being said, there is a lot of daytime in front of us, and the daytime candle is red. And here we are as I speak, coming down to try and test the Fibonacci and the two ghost lines, and it immediately got pushed back in the middle of the video. Since price action is going as the video is being made, we can actually see my thoughts happening. So yeah, it's coming down to test this. Don't think it'll break through. It's getting pushed back, coming back down for another test right now. You can see it move if you're paying attention. So yeah, I don't think that's going to break through. We've got 4 minutes before the next candle comes up, and it's going to be red and continue to test this area. Wow, getting stronger. Ooh, okay. We're getting a lot of bearish volume right now. So it's really trying to test this area really hard, getting pushed back For whatever reason, bulls are willing to fight here. Institutions are willing to fight here. That was the other thing. That's why I used the Fibonacci. Institutions love to play on the Fibonacci. Okay? They use it all the time. If you've ever traded with an institution and you're watching, you'll notice that the price action bounces off of fib lines on a daily basis. So this is why we have our consolidation and fib lines in here. This is where the price is going to change direction all the time. Okay? This is why I use it. I have two indicators on the screen that tell me the possibility of a price direction change. Okay? Or a price bouncing point. Fibonacci is one, consolidation lines is the other. Okay? So we have like the triple whammy right here, and we also have the consolidation line that's running across the bottom of the channel as another area of support where it bounced here, here, and here. This is that one consolidation line. So now this video is over. Thanks for all the new subscribers. You guys have a blessed day, and I will see you tomorrow. This is the Dark Sage signing out. Peace.